Hi there, traders. This is Brad Goodwood with today's trading action. All right, now equity markets in the US got a little bit of a belting. Tesla fall after report on six-seat Model Y plans. Boeing drops after brokerage rating downgrade. Nvidia sheds 279 billion in market value. Right, that's going to really upset the apple cart. And what we did see on the equity markets, okay, the S&P 500 down 2%, NASDAQ down 3.3%, and the Dow down 1.5%. Now, these are isolated because of these major companies, right? So when you are looking at the major currency pairs in particular, right, no major change, right? If anything, we did have a bit of a risk-off day, but those massive moves in the equity markets were because of the equity markets, not because of some other event. So we have seen a bit of a risk-off profile, definitely on the Aussie Kiwi and the CAD, right? A little bit of an unwinding, but the dollar is generally sort of still hanging in there after last week's, short dollar short squeeze. The whole market's short dollars because the Fed have signaled they're going to be cutting rates. It's just a matter of by how much, right? And that's what we sort of need to be focusing on. Like and today, as you come into the market today, like just scrolling back up here, there's not a lot coming out initially. Then we've got the GDP numbers out of Australia. We'll be covering a live session on that. It's about time the GDP numbers start to have an overlaying or like a major impact on what is happening in these economies, right? We'll be able to get a very good look at what's happening, and that could lead to a potential opportunity there. Now, come into where the focus will be today, right? It's really down around the Bank of Canada interest rate decision, right? We do have the factory orders out afterwards, and the press conference is 45 minutes after this release. Now, before you get excited and think, okay, the Bank of Canada are going to cut by 0.25%, it's 100% factored in, right? So you're thinking, well, I'm going to sell CAD against a bunch of currencies. Before you do that, just have a think of this. Right? If I just come back to the interest rate probabilities page, the Bank of Canada, okay, they are cutting today by 0.25%. Now, this table says 74% chance, but that's actually because there's a 25% or 26% chance that they cut by 0.5%. So really, the 0.25% is 100% factored in. The fact that this part here tells us what the reaction is going to be in the market. Because if the Bank of Canada cut interest rates by 0.25, which has 100% factored in, then there's a big portion of the market here, 25%, which thinks they'll cut by 0.5. So they'll have to go and buy Canadian dollars to square up those positions. So to me, this is the sort of secret gravy here. If they cut by 0.25%, expect the Canadian dollar to rally short term as these positions are factored back, sort of factored out, right? That's what we have to think of. And when you're looking for trading opportunities, right, it's all about sort of isolating the best trading opportunity. Now, on a daily perspective, to me, the sterling CAD is going up. So is sort of Euro CAD, but it's pulled back a bit, lost a bit of steam. Actually, CAD Swiss also going down. Aussie CAD, and you're looking at sterling CAD, Kiwi CAD, these things here are sort of drifting sideways. We did have that big move down in CAD Yen, now drifting sideways as well. To me, sterling CAD and Euro CAD are in play. But we can isolate the trading opportunity a little bit better. Because if I look at, say, Euro CAD, right, Euro, central bank, the current rate's 3.75. There's a 98% chance of them cutting rates in just over a week, right? That's not going to be very appealing for the interest rate differential. Whereas you look at the Bank of England, right? They're in like 2 weeks, their current interest rate's at 5%, and there's a big chance that they don't change at all. So the interest rate differential trade will be towards sterling, right? Sterling CAD is the one that I would be looking at. So you can see it very clearly on the daily chart. So what I am expecting is a slight sort of drift down here on this instrument. Okay, and that sets us up to get long at a lower rate and then hold So the initial flush out will be buying CAD just to, as I said, factor out that 0.5% cut. So if the market's at, say, 60, I would expect that to probably drop 20 or 30 points, right? You look to get long on a dip or on a rally back through these levels. Now, don't forget, the Bank of Canada press conference is 45 minutes later. If they come out with a neutral sort of press conference and sort of say, well, basically, we've cut rates again. We're going to wait and see how the market sort of comes out, reacts after these numbers. And what I'm talking about is the economy, not like the price action. So, but that's a standard release. In the press conference, they may come out and get hit with the question, are you cutting rates again? We are ready to cut again if needed to be. If it's aggressive like that, well, then sterling CAD is going to take off to the top side. So you have to be aware of that, right? And the fact is, if you look at the Bank of Canada, as far as what they're going to be doing with rates going forward, right? They have got rate cuts sort of factored in till the cows come home, like most other central banks. So there's no chance of them coming out and saying we're stopping here, right? You've got to understand that. So really, the focus is getting into an instrument with interest rate differentials are in favor of the move of the interest rate cut in Canada. And that's what I'm sort of looking for. So today, sterling CAD to me is the no-brainer trade, right? I'll be making an update on the website and you can see the details of where to get in, where to get out, etc. on that opportunity. I'll be executing on the hourly charts. I can see a little bit better where my entries on the top side and where support and resistance are. These will give me clear opportunities to get into the trade. All right. So that's my sort of experienced guess, right? If they cut by 0.25, the Canadian dollar will rally. And it's almost like the market's preempted it, right? We've seen a bit of a shuffle down in Aussie CAD. That's more of a Aussie move down than CAD strength. But we'll see a little bit more weakness there. So just be aware, if you're thinking of selling CAD immediately after the release, you might get into trouble, right? Give it 5 minutes, then sell CAD, right? Once the market's factored out that 0.5% cut. That doesn't make sense. Get on the Discord. I'll explain it a bit better, but that's where we are right at the moment. And don't forget, we have got these factory orders, right? The peripheral numbers here in the US are impacting what the predictions are for the Fed coming up. Now, 4.7% expected for the factory orders. And you got a pretty big range there, 2 to 5.5. If this comes out negative like last month's numbers, well, I can tell you the chance of a 0.5% cut by the Fed will increase, right? That should traditionally see the dollar fall. But to me, our biggest danger here is if the Fed starts to come into the market and the chance of a 50 basis point cut increases, right? We could see the dollar rally as a safe haven, because you know what? If the Fed cut by 0.5%, it means global growth is in trouble. The news services will start publishing things like global recession on the way, etc. Right? That sentiment will only last a day or two, but it will do enough to mess the markets up for a day or two. So really, we don't want any sort of more serious, weaker US numbers. We want normal releases, and we'll see how it goes. But today, focus on the Aussie GDP numbers and also the Bank of Canada interest rate cut. It's going to be exciting. Let's see how it plays out. Good luck, guys. All the best. Cheerio.